Good morning, everyone. Hello, welcome. Hello, welcome. Good morning, good afternoon, good evening, wherever you are. I hope you're doing well. Right, okay. Back to the base. Good morning, Mr. Boomer. Right. Okay. Today, we're going to talk a little bit about what's going on with the markets. Good morning. I hope you'll see my screen. Can you see my screen? Do you see Bitcoin chart? Good. Morning. Right. Okay. Right, okay. So, today is the 7th. It's a Wednesday. Let's have a look what's going on. Let me show you what I see. I see that we have the market clock here, and we are towards the end of the Asian session, and we just opened right now the European session, which is London, Zurich, Frankfurt, Moscow as well, and Johannesburg. We still have ongoing. We got Hong Kong, which is closing. Shanghai is already closed. Tokyo is already closed. Singapore towards the end. We got India, Mumbai. We had Riyadh, which is Saudi Arabia, and Dubai. Okay, so all these markets now are correlating together, right? Not enough green. No, it's not enough green. No, it's not. Here's the bubbles. This is the daily bubbles. Single numbers, except for WIF that it gave a double digit. The rest of them, single, right? Not enough green. Okay. And we have the out season chart really on the low, 22. It's not out season. Nope. And that is another chart that I like to pause a little bit. This is the liquidation heat map that I gave that into the web room, so people from the web room know this. I gave out a post about this, that Bitcoin wanted to clear the liquidity below around the 50. Okay, it tried to do something like this in the beginning of July. It did not manage to do it. It came all the way down to 53-ish and then turned around, and then it came back a couple of days ago and clear all the liquidity. Now that liquidity is gone, and now we have a huge liquidity above. All right, but I want to discuss about TA, the chart, what's going on. Okay, this is not a FOMO and this is not a FUD show, but you guys know that I look on the higher time frames. Okay, I do day trade, I do some intraday. Intraday means couple trades within the day, but majority of the time I do a weekly trade or a monthly trade. I do super long trades. Okay, that is the reason is behind it is because it's more relaxed. You don't panic easily with every move. You have enough time to maneuver. I don't go on huge leverage. I use leverage to help me out to go a little bit faster than spot, but that's it. Okay, you're not gonna see me. I'm gonna do like 50x or 100x. That's not the case. You may see me do 20x, 10x, 5x, 3x. Depends the duration that I want to stay in within the markets. Okay. Now, this is Bitcoin. A lot of people are very uncertain. They don't know what's going on. They see all these huge dump, and they're like, okay, this is a crash. I don't want to give any excuses. Let's go straight to the point. No, that doesn't look good. That doesn't look good. So let me take away my levels for a second. Let me clear a bit the levels and let's observe a little bit the chart as naked as possible. Okay. So zoom out a little bit. And what do we see? What do we see? We see that Bitcoin moved to the up. There's more correction, small pause here. Hit all-time high. Okay. Come back, trying to break the previous high. It did not manage it. Comes down, comes up again. It's trying to get all the previous highs. It doesn't do it. Can't manage to do it. One more time. It doesn't. Comes down. One more push. What do you see? We see that every time that it's trying to push, all these highs are getting lower and lower and lower. Okay. So it's a kind of weakness. Okay. It's a kind of weakness. This is how I see it. Every time it's getting lower and lower. That was a technical range that I marked ages ago, since February and March. And when Bitcoin hit the top of the range, it bounced, it created a range. Right? This is why I marked these levels. Came back, deviation, got in, hit the top of the range, come back, deviation again, trying to come up inside. It did not manage to hit the top of the range, barely, very barely to sit, a little bit for just for a matter of days to sit a little bit above the 50 and then lost it, right? And then it got out of the range as well. Okay, and what do you see? We see a high, a low high, a low high. These two are equal highs, but compared to that one are low highs, and this is low highs. This is a low, 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 low. What kind of trend that is? Can we say this is a range? No. Can we say this is an uptrend? No. Can we say this is a downtrend? Yes. Okay. And it's a very painful downtrend. Why? Because it's doing a rallies, right? While it's trying to come down, then it's doing a rally to the up. Then it comes down, and then someone is pushing and do a rally to the up, and then it comes down again. So overall, what I see Bitcoin being very weak. It cannot break above 72. Right, and that is a little bit alarming. Now let's have a look a little bit on a higher time frame. The time frame that I usually watch on spot, right? Now and then I do watch out what's going on with spot time frames. So I go to the monthly. Okay. Now, very quickly, I'm going to say to you guys, the monthly time frame with indicators like stochastic RSI, right? I can switch off a little bit for the time being. I can switch off the other indicators in order to create confusion. Let me hide a little bit the range. I'm going to bring it back later. So if you monitor the monthly time frame with one indicator, which is the stochastic RSI, pretty much you can see when the market is gonna hit the very bottom. So you're gonna know when it's gonna be the bottom of the market. So it will be the time for you to start thinking going long, the beginning of the bull market, and then you can see also the top of the market. The conditions that we're looking for are the cross ups and the cross downs. And let's observe a little bit what happened in the past, so you can see where I'm coming from, and you can see what I see. So I'm going to print vertical lines on the chart when we have a cross downs. Okay, so we have a cross down here, we have the cross down here, a small correction here, another cross down down here. I can do other cross downs in the past as well. That's not a problem. We can go as far at the back as you like. Okay, another cross down here, and another cross down here, another cross down here. So if I go all the way back to 2011, let's start from there. Okay. When we have a cross down, and I can go to the weekly because we marked the vertical lines based on the monthly time frame, but I'm going to use the weekly for you to see the price action. Okay. So here we are. We have the first cross down of the monthly. Okay. And we have the correction of the market. Okay. The second monthly cross down is that one here. Okay. We have the correction. Another one. Here we are. Another cross down in these areas. Here's a cross down. Here's your cross down. And the market correct itself. Okay. Let me clear the drawings. Let's go further to the right. Another monthly cross down. Here it is. Another monthly cross down. And that was the beginning of the correction. Okay. Another monthly correction. And nothing like a monthly cross down. Here's another correction. It goes down. Okay. Another monthly correction. Cross down. Boom. It goes down. Okay. Another cross down. Monthly cross down goes down. And we have another monthly cross down. And the market price action goes down. And the same thing happens with the cross ups as well. So let me clear all the vertical lines. And let's do now the monthly cross ups. Here we are. So cross up, vertical line, another cross up here, another cross up here, another cross up here, another cross up around these areas. That's the first cross up that we had here, another cross up here. So again, let's do another observation. Every time that we have a cross up, okay, the market is going to turn around. Okay, every time that you have a cross up, the market goes up. Another cross up here, the market push to the upside. Okay, another cross up, the market push to the other side. Another cross up, market continue to push to the upside. Okay, so on the monthly time frame, if you are, let's say, a day trader or investor, to be more precise, if you're an investor and you're looking to know when is the bottom of the market and when is the top of the market, you can use the monthly time frame and you can see when it's reaching, most likely it's going to reach the top of the market. Okay, so there's a huge cross down. That was the top of the market. It went down. Okay, and then it bounced. It was pushing up. A lot of people got very, very excited, right? And they did not pay attention. Let me bring the indicators here. They did not pay attention to the bearish divergence, right? So that's your high, that's your low high on the indicator. So it was a downtrend. Price action was giving you a high. That's the divergence, and that is a bearish divergence. Price action was going higher when indicator was going lower, and everybody was very hyped up, and they believed that it's going to go to the moon, right? And this is where everybody got trapped. What happened now on this bull run? Since we touched the previous all-time high, this is where everybody, all the old investors, that they got trapped from here, they're exiting. right? All these people that have got trapped for a very long time, they exit the market with break even or maybe a very small loss. Okay. Now, this is the alarming state. This is the thing that I don't like. I see that we have a monthly cross up. Now, if you wanted to clear this noise a little bit, you can go to the 2 months. All right. The 2 month time frame is super clean. No noise. No noise at all. Do you look at any specific levels? Not really. No. On the high time frame, you may see, it's very rare that you're going to see multiple cross-ups happening in between. It's going to be either at the very bottom or either at the very top. So technically that 80-20 or the overbought oversold area is the area that I prefer to see the cross-ups and cross-downs, right? To be honest. But, on a monthly and, on a monthly 1 month, the cross-ups that I'm interested is, I need to know that I am rock bottom or rock top, right? Anything in between is good to observe, but they're not going to be high significance, right? So I don't spend a lot of time, because this is a very high time frame, it's a monthly time frame, for you to start off, at the very bottom and get out on the very top. That is November 2022, December 22, and that is March 24. So it takes 2 years for you, to reach the very top or the very bottom, right? It takes some time. And that is a super clean time frame for investors, for people to know when is a good time for you to get into any kind of market. This is crypto now, and we're using the monthly time frame. And you want to know when is the time for you to go all in and when is the time for you to get out. Okay. So here we are. On the monthly, we had the cross down at the beginning of March. Okay. Now, back in March, it was too early for us to see that, that was the end of the market, right? Because we've seen corrections before. And I'll give you that example. It came all the way up here, the top, came down, just a little bit below the 50, and then turn around. And what you had? Continuation. So that was the beginning of the market, right? That was the bear market. That was the beginning of the market. It pushed up, small correction, and then it pushed up, right? It was creating support. So it was the same case here. Like, okay, we're doing a correction. And it's been for a very long time that I speak that we need to have a correction. We never had a decent correction so far. Why do I say this? Because every time that Bitcoin is doing a correction, it's doing a correction to the size of 50, right? All the way to sometimes 70%, right? And that correction that we had so far, it's not that great. Okay, so let's measure the correction. Let's measure the correction that we had recently. Okay, so let's measure the previous correction. That's the previous correction. That was around 56%. Okay, very top to the very bottom. The correction that we had so far, I mean, back in the days, was only 25%. Let me go to the weekly so you can see a bit more price action. All the correction that we had from the top to the first time the correction that we had was 23%. And I was saying, this is not enough. This is not a true correction. Then it died for the second time, and here's another 27%. And I was like, still not happy. I said, guys, this is not a correction. Every time that, it did a dive of 20% and turn around, everybody was getting hyped up. Oh, that was our bottom. We're going up. And then it comes down. Oh, this is the bottom. Now we're going up. No, it gave you even a lower low, right? So even if I measure this is not, it's only 33%, okay? It is not a true correction yet. It's not near to that 50%, of the correction that I'm looking at. Okay. On the same, on the same page, let's go back to 2 months. This is my alarming state. This is my warning state here. Now on the 2 months, which is even super clean and tight indicator, every time that you have a cross down on the 2 months, it's like clear sign. This is it. Okay, a cross up, we're moving up, cross down, we're moving down. Okay, and that was a trap. We had a cross up, we start moving up, and now we're heading for a cross down. If that happens, that's it. That was a top. Doesn't matter how much I don't like this message, this is what I see. If that happens, if that stochastic RSI cross down in, let's say when? In 24 days, look the reverse timer that I have here, the countdown clock on the bar. So we got another 24 days for the 2 month time frame to close. It means it's going to print the final stage in 24 days. So if in 24 days we get a cross down, that will be the sign for me to say that's the top of the market, unfortunately. I don't know why. It is not the right time to have the market top, to be honest. I was expecting the market top to be Christmas 24, right? So I thought that we still have 6 months, at least 6 months to go higher. Okay. Why I say that? Because this is what we have in the previous history data from Bitcoin, how much it's going to last. And I can even go high on the time frames. And this time I'm using price action, and I'm using only the 6 month time frame. And I see how many engulfing candles we have. Do you know what's an engulfing candle? Is when you have, let's say, a negative bar, and then you have a positive bar, an opposite bar, right? That goes higher. It has the start, it has the same starting point, right? But in engulfs, right? It takes over. So I usually, if I go back in time, let's find an engulfing candle, right? After a bear market. So that's a bear market, right? It dumped. This is a 6 month time frame. Every candle is a 6 month duration. Okay. So here we have the first engulfing candle. I measure 4 candles to 5. Okay, not including the engulfing. So I'm going to ignore these two. I'm going to put a little box here. I'm going to ignore these two. And I'm going to measure 1, 2, 3, 4. Right? 4. And that's the top of it. And then comes down again. Okay? 1, 2, 3, 4. Let's go to another bear market. Okay? It comes down. Bear market. This is engulfing. I'm not counting this one. 1, 2, 3, 4. We had a 5th one, and then it came down. Okay. So average, we got 4.5. Right? The first time we had 4, the second one we had 5. Now let's measure this one. That was a bear market. This is engulfing. This is number 1. This is number 2. This is number 3. So I was expecting number 4. Right? So I'm still missing the 4th candle. Right? So if I put that candle here, so I'm missing a 4th candle. Right? And that is a 6 month candles, right? So that started it, in July 23. That was a monthly candle of June 24. So that's the the 6 month candle of July 24. So we're looking for January, right? The next candle is going to be January 25, and it's going to last for 6 months. So we're talking about after Christmas, we start thinking that we're approaching the top until the June of 25. January to 25, June to 25 was the maximum top of the market. That was the expectation. But the signs are not looking good. They're not looking good. Right? And you can see if I draw a line here, the previous top with bodies, we did not manage to break above. Only just for a little bit. A small body there, but we have an engulfing candle to the downside now. And that's my worry. This is a problem now. Okay? We need to be very careful now on the 2 months. Right? Here's the stochastic RSI. They haven't touched yet. We've got another 24 days before we're going to get the final, if we're going to get the cross or not. Why do I say this? I'm going to put some vertical lines here. This is one vertical line. This is the current vertical line. The previous 2 months that happened in May 24, let me mark the points. That point here and that point here are fixed. It doesn't move. Okay? These 2 lines, okay, are not fixed yet. That one and that one there are not fixed. So I'm going to remove the trend line for the time being. So these 2 lines are fixed. These 2 points are fixed and not moving. These 2 points are not fixed yet. They need another 24 days. So technically, what may happen in 24 days, if the price action turns around now, we may see an update in 24 days and these lines to be printing differently, being something like this. Right? Why? Because these 2 points are not fixed yet. Okay? So we've got another 24 days before these lines are going to be fixed on this vertical line. You know, that yellow, the first line can go like this, it can go higher, or it can go even lower. And we get the true cross down. So we've got another 24 days to see when or where these points they're going to end up, these values. The value that we have now is 92 on the fast one and 91 on the slow one. They're not touching yet. We don't have a cross down, but it doesn't look pretty. Okay. If I get a cross down in 24 days, I'll be out from my spot. I'll close down my spot. I'll take my profits. I'll turn around. I'll start shorting everything. I'm already shorting, but in the lower time frames for short term, right? Not long term. Will the ETF not soften the 50%? Okay, that's a good question. That's a very good question. What about the ETF? What's going on with the ETF? Let me give you my insight. It's nothing special, but if I give you my mentality, then you may see it as well. Now, who is using the ETF? Is it me and you? It's not. It's for the big guys. These Zoom meetings you're doing are just annoying. Your sound is always so bad, always break for minutes. That must be your internet connection, not mine. Are you sure? Because we can go into my YouTube and you can see that my Zooms don't break. Anyway, going forward, let's have a, if you're using Wi-Fi, trying to move closer to your Wi-Fi, and if you're using a cable, that will be much better and stable connection. Sound is great. Okay. All fine. Okay. Sometimes, Zoom, when it's getting overcrowded, stuff like that, it may give you a hint, but not for very long. It's going to be like for a few seconds. So if you're using Wi-Fi, trying to get closer to the Wi-Fi, Or if you're using cable, if you have the option to use cable, that will be more, more stable for you. Have a try and let me know. But I can guarantee you that Zoom has a very high capacity. It works better than Discord. Discord is giving us a lot of trouble. That's why we're doing Zooms. Right, okay, let's go back to the TA about ETF. Now, ETF, it is not designed for you and me. It's designed for the big companies and the big fund managers like BlackRock, Greyhood, Silver, the rest of the deal. Give me 1 second, guys. Right, okay. So ETF, it is not for me and you, right? We're using the exchange. It's like we're using Binance, we're using Bybit, we're using all the exchanges available out there for the retailers, okay? The ETF now is for the big boys, for the big players, right? Why? They cannot go into Binance, for instance, and they decided to trade. Why? Because they're using large funds. They have larger funds than Binance. They have larger funds than all the exchanges together. So can you imagine someone joining, BlackRock joins Binance and then decides to throw 1 billion to buy Bitcoin? It would destroy Binance. Binance doesn't have the funds to cover these people, okay? So the ETF now is for the big boys. Now, the big boys, the big players, people that they have, like BlackRock, altogether, they have assets equal to 100 trillion. Okay? 100 trillion. Last year, the reports that I found for BlackRock, they had available cash 10 trillion. Right? We're talking about a lot of money here. The assets that they are managing is worth 100 trillion, and the cash flow that they have to invest, it was equal to 10 trillion. Right? What's the market cap of Bitcoin today? Let's talk about that one here. Let's go to CoinGecko. Let's go to CoinGecko, and this is Bitcoin. Okay. And the market cap right now is 1.1 trillion. Okay, the market cap, here it is, of Bitcoin alone is 1.1 trillion. And BlackRock has 10 of them. Okay, so BlackRock has, enormous amount of money, and it can, create a huge impact to the market. If we look on T1, let me bring my little agents here. If I bring my T1, total one, this is all the crypto space. It's everything. Bitcoin, Ethereum, altcoins, all together. We're just under 1.9. We're under 2 trillion. And 1.1 is Bitcoin alone. Okay. T3 is everything except Bitcoin and Ethereum. And the alts right now, they currently stand at 546 billion. Okay. So what's my point here? My point here is these guys, these boys, that they have so much money around the world. They're smart, right? They're not stupid. Okay. So if they are smart and not stupid, they're not going to buy here on the top. Okay? What are they going to do? They're going to drive the market. They're going to try to push the market, push us out of the space, right? And trying to bring the price down. When the price Bitcoin is going to get as low as possible, I don't know how much, but let's say as low as possible. Let me bring a trend line here. Let's pretend I have a trend line here, right? Let's call this support. Okay, so here's the support. So let's pretend that these guys are going to push the market to the support around where? I don't know, around 40,000. Then it's good time for them to buy. Not now when it's around 70 or 50 right now. Okay, they don't care about 60 and 70. They want, to pay attention, and they're going to be interested when they're going to find a nice, good support around 40-ish. Then they're going to buy Bitcoin. Why? Because they're traders. They're doing this for a very long time. They don't buy expensive. They buy cheap. They always buy as low as possible. They always sell as high as possible. So ETF for me is not in yet, right? They're trying to, how do these guys, what are they doing? They don't wait for the perfect, storm. They don't wait for the perfect time and deploy everything 100%. They don't do that. What they do, they say, okay, we can deploy a little bit money here. And then we can deploy a little bit money further down, and then a little bit more further down, and then a little bit further down, and then down, a little bit lower, a bit lower. And then when it hits the rock bottom, then, Bitcoin starts turning around, they're going to deploy more money on the way up. That strategy, that process is called DCA. Okay? They do not do one single entry. They do multiple entries. They do like hundreds of them. Okay? Why? Because they don't take chances. These people, I said, they're very experienced. It has nothing to do if they're smart or not, or if they have high IQ or low IQ. It's experience. What they're doing is they know very well, and you should as well. You should know as well that the market is a random walk. You don't know from where you are sitting. You don't know what the market's going to do. You don't know if the market's going to dump, and you don't know if the market is going to pump. You don't know. You know that's going to move, but you don't know when and which direction. Why? Because markets move in a random way. It can go up, it can go down. Right, okay, sorry about that. So what's going on, guys? I mean, these guys, they know that the market is a random walk. It means, the market can go up and down. So they don't take chances. They don't wait to the very top, to the very bottom, because they don't know what the market's going to do. As you're expecting that the market's going to go down, bam, it turns around. And you're going to say, oh, shit, I missed it. Right? That was the bottom. I missed it. I thought the bottom would be down there. They don't think that way. They don't see the market that way. They don't have strategies like these. What are they doing? They said, okay, it's going down. Good. We buy it cheap. Right? It's going even further down. Oh, we buy it cheaper. It's good. Let's deploy a bit more money. It goes further down, we buy more. It goes further down, we buy more. So what are they doing? The DCA, right? They bring the average. So this is number one, this is number two. When they buy on number two, or the level number two, the DCA price, the average, will be somewhere here. So I'll put D1 as a DCA1, okay? And then when I buy again on number three, so this is number three, they're going to bring the distance, right, between D1 and 3 somewhere in the middle. So they're going to bring D2 somewhere here. That's the average. And when they buy on number 4 level, right, they're going to bring the DCA D3 here. That's the actual price when they bought it. And this is the average, the outcome, what happened afterwards. So you see what they're doing? They're dragging down the entries. They're bringing down the average. The first buy was up here, but look where it stands later, right? They made the first purchase was all the way up here. They made the second one, they made the third one, they made the fourth one, and all the way to the fourth one, they brought the average all the way down here, right? So when the market is turning around, they're going to be profit from this level. They don't need to wait from level 1 anymore. Okay, so this is what the big boys are doing. The DCA all the way. Doesn't matter if it goes up, it doesn't matter if it goes down. But what if more private long-time holders get BTC? If you're an investor, okay, let's say that you have, doesn't matter the amount of the money, but an investor, let's say that he has 100K, okay, and he's going to use maybe the monthly time frame or the 2-month time frame, okay. Let's go for the 2-month time frame, and let's pretend you're an investor, okay, and you're going to use the help of stochastic RSI. Here's your stochastic RSI, and you have 100K. When are you going to deploy majority of the 100K as a long-term trader? When you know that's going to be the bottom of the market. How do you know that's the bottom of the market? When price action is dumping, then consolidates a little bit, and then you see indicator giving you a cross up, which means already the price action start moving. Okay. So the cross up is a confirmation that things move into a new direction. Okay. Price action is telling you this is a dump, that was a correction, or the bear market, whichever you want to see it. And then you see a small consolidation, and then the cross up is a confirmation that the market is turning around. That will be, let's say, the time that you're going to deploy most of the money. Maybe you're going to deploy out of 100K, maybe you're going to deploy 70. Okay, you're going to leave 30K just in case you have a fake out and then comes down again, and maybe you have price action coming lower. So you've got a 30K just in case, right? It goes lower for you to DCA. If it doesn't go lower, and that, you know, that 2-month time frame chart is very solid and very nice and clean, you can deploy the rest of the 30,000 after a new correction. So it goes up, comes down, it's doing a correction, and then turns around, and then you can deploy the rest of the 30K. Okay, so that's your first deployment, and that's your second deployment. And you have 100K into the market. And when you're going to take them out, you're going to take them out on the cross down. Okay, so if you measure from the very bottom to the very top of the cross, maybe to the bodies, I'll go to the bodies, is 1,455% move. That's what an investor does. An investor doesn't care how long it's going to take. What he cares is to make sure that he buys cheap and he sells expensive, and he makes the profit. And that's what he made. 1,455% to the upside. The question is, you need to make sure that I need to get a cross down from the indicator on the 2-month. Okay, that will be really the signal. You know, when I get a cross down, it will be the signal for me to say that the market is turning around. Okay, monthly, we already had the early sign. Okay, but that wasn't definitely the sign. Because why? Because you know that you may have a correction and then carry on later. Okay, you may get another cross up here. That's why I'm saying on the 2-month, we still have 24 days, right? So we've got one more month. On, here it is, the countdown, 24 days for the 2-month to make sure, right? To make sure, here it is, 2 months, 24 days to make sure that it's going to be finalized, right? The cross down. If in the next 24 days, the 1 month time frame, this is the 1 month, okay? 1 month. If in 24 days manages to do a turnaround in some point, it gives another cross up, then we may see a nice move to the upside, and we say, okay, that was a correction. It was trying to give us the proper correction. Remember the 50%, okay? And then it's got room for another 6 months to a year to do the final top. Remember that I said my expectation was for another 6 months at least. Okay. I wasn't talking, I wasn't thinking to talk about the top of the market right now. I will, my expectation was for me to start talking about the top of the market. It was after Christmas, in the spring, okay, somewhere around March of 2025, to start giving the, the signal, the heads up to the people to say, hey, watch out, take your profits. That was a little bit too soon, right? Now, around the world, a lot of things happening. Okay, it's a lot of things happening, and they play a lot of factors. We have a lot of factors. We've got the war going on with Ukraine and Russia. That was the beginning a couple of years ago. It hasn't ended. It hasn't ended. It still goes. We have Israel. Now we have all the Arab countries preparing to see what they're going to do with Israel. So there's another war going on over there. So things are not pretty, not easy. Okay. It's not easy. It's not easy. Currently, in the world that we're living, it doesn't look pretty. I don't know. I hope it changes. I hope I'll be wrong, but we need to see some changes soon. If we continue the way we're doing, the way we're going, it's not going to look pretty in a couple of years. Anyway, also we are expecting also the market crash happening around 2026, the global crash. Okay, that's another thing that we can talk about. So this is a session, education session that I would like to give you a heads up a little bit. Be prepared. See the high time frame. The high time frame that don't lie on you. They have so much less noise on the price action and in the indicators. They will not fail you. And after this session, go back to your charts and go to the any kind of market that you're watching, crypto, forex, commodities, stocks, whatever you want, and go use the higher time frame, like a monthly, 2 months, and see what's happening. Okay, what's going on, and observe. Just go and observe. Do a back testing. Okay, my back testing, it works every time I get a cross down, a confirmed cross down after the clock has been reset, and if I get a final cross down, the price action will be already starting to descend. Okay, so far Bitcoin from the previous bottom to the let's go bodies to bodies to be as an average. It gave a 275%, right? Every cycle is getting weaker and weaker. Okay, it cannot give you that 1000% anymore. Okay, why? Because this is how the cycles go, right? When you do early adoption into a token, at the beginning of when there's low demand, so to say, right? A lot of people can expect big moves. When that chart or that token attracts attention and you get more investors and buyers, then the moves they're going to be slower, smaller, because it requires a lot of money, more money, to push forward. Give me 1 second, guys. Sorry, guys. Phone call. Phone call from the day job. Right. Okay. Back to the conversation here. So yeah, every time that investors and people are taking notice into a token project, whatever, and it requires more money to push, this has to do with market cap as well. Okay. So how do you do short on a long time frame? It's easy. Cross down on the monthly or the 2 month time frame or 1 month time frame. You're short and you're using the futures. Hold on again. More phone calls. What's going on today? They miss me. Everybody miss me. Right. Okay. Okay. Yeah, so I use the futures and I go like 3x, 5x, and I go short on long time. You know, long term trades, I do 3x, 2x, maximum 5x, depends what token it is, right? Yeah, Abdul, he's from the universe. I see stars. Something wrong with his camera, but we see stars. And I see Indrek. We've got the sky, a blue sky with a little clouds there, fluffy clouds. Fees a problem? Not really, not really. If you're using low leverage, you shouldn't get a problem with you shouldn't get a problem with the fees. Low leverage is fine. Also, what's the appropriate time frame to enter trade for me following? Daily trade and weekly trade. Okay, if you're doing daily trades like day trades, then you can look on smaller time for like 4 hours, something like that. If you're gonna do weekly trades, then I look at 12 hours. Do you use stochastic RSI on a lower time frame like that? Yeah, of course I do. Of course I do. My gang, so to say, of my agents is stochastic RSI, and ASO. I use all these three together for me to determine, what is going on, right? So just to give you an example, this is Bitcoin on 12 hours, and I need to pay attention when and if I get both of the indicators at the very bottom. Okay, stochastic RSI at the very bottom, RSI at the very bottom as well. Right, here it is. When I get these two guys at the very bottom and get a close up, it's a sign of a bounce. It's a sign that it's going to move. You can do that on the daily as well. Here's a daily. You have a cross up, RSI turning around. This is a bounce. Okay. However, we need to. I need to let you know something as well. This is my kind of strategy. I'm using these two indicators. You need to pay attention as well on the trend. Okay. You need to identify first the trend for you to see which conditions you are going to use. Okay. Remember, we have the cross downs when things going down, and then we have the cross ups when things going up. Okay. So if the direction of the market is a downtrend, I pay attention to the cross downs that have higher significance. Okay. Because if it's a downtrend, my favorable, so to say, trades are going to be the ones that are going down. Okay. If I am in an uptrend, then I'm looking for longs. So then I pay attention to the cross ups. So you need to make sure and you understand that, you need to see the direction first. If you identify the direction, which is a downtrend, then the events that you're looking for are going to be the down, the cross downs. Okay, so you're looking for this kind of events, right? This is the events that you're going to look for. Now we have a bounce. That is a relief rally. That doesn't mean that it's going to print a high. Okay, why? Because it's a downtrend. Okay, so you don't expect something like this. You may expect something like this and then continuation. When this RSI is going to hit the top again and it's going to give you another cross down, and then RSI is giving you a turnaround, that will be the opportunity for you to go short again. Okay, so identify the direction first and then look for which events are you going to look for. Are you going to look for the cross downs for shorts, or are you going to look for the cross ups for longs? That is going to be determined by the direction of the market. So the direction of the market right now, let's put some levels up there, right? I'm going to mark, right, the lowest level. You can do horizontals. It is. So that's the lowest level. Okay. I'll put that as a support. Okay. And that is the highest level. If I can mark, give me the tool, here we are. This is the very top. Okay. This is the very top. So that's, let's say that's the resistance. Resistance. Here we are. Okay. So this is the very bottom, that's support, and this is the very top, this is resistance. You see, since we hit that resistance, which is around 74, we cannot get any closer to that resistance. Give me 1 second. Right, okay. I got my kid here as well. So here we are. So we did not reach, again, the same levels. And this is like a little bit, you understand that that resistance is quite strong, right? The price, it fails to come all the way up back to that same level. And what do you get, right? What do you get? Let me do another parallel channel. So this is what we have here. Okay, you have a down parallel channel. Does that make sense? Is that clear? Okay, so if you are in a downtrend, what kind of trade are you going to look? Every time that you're going to hit that resistance, and you know that in horizontal setup you cannot reach the major resistance, every time it goes lower and lower and lower, what is your thesis? Well, next time that it's going to come back to these levels, you're going to short it. Okay, why? Because it's still in a downtrend. Okay, and this is acting support, this is acting support, this is acting support. That was a liquidity clear out. Okay, it cleared the liquidity and then it bounced from here. So from this, what do you expect? Maybe we're going to get another push to the 50% and then come back to the top of the range and then come back again down. Something like this. Okay, but overall, we're in a downtrend. Okay. Other people see something, another nice little pattern, which I hope it plays out. I'm not very fond of, I'm not a very big fan, with patterns, but this is a huge cap, and this is a handle, and the trick behind it, or the TA behind it, is you need to join the 2 points, the previous high and the next high, to create the cap. You measure from the very bottom to the very top of that line, and then that is going to be the projection when a NIF is going to break the handle in any point. It's going to break it from here, it's going to break it from there, it's going to break it from there. It's after the breakout is how far it may go, right? So if it breaks the lowest level of this parallel channel, right, let's go to the lowest resistance, it can go all the way up to 120 or 119. Okay, it may, if that plays out, but I'm not going crazy with patterns. Okay, I go with price action, and I see the charts, what is printing me, and this is what I get. I get this parallel channel. Okay, I get this parallel channel, and I hit the support. Okay, so that's a support, that's a support, that's a support. What do you expect from support? That's going to bounce. Okay, it's not going to give you a guarantee that's going to go straight up. You may go sideways, you may hit the 50, and then it will come back again. Do not expect, do not take it as a granted that it's going to go all the way up to the top of the chart. Okay, so be careful. All I'm saying is look the price action. It's a high, low, high, low, high, low, high. Right, this is a low, 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 low. Okay, don't fall for the trap. Is a downtrend. Okay, still in the correction phase. watch out for the monthly time frame with your indicators. Look at that. Stochastic RSI heading downwards. On the 2 month, we're heading for the cross down. We've got another 24 days to see this. You know, it needs a miracle. It needs a miracle to turn around. Okay, it's not impossible, right? It needs a miracle, like maybe the monthly. I don't know if the monthly is going to come all the way down to the zero, to the overbought. Maybe it's going to turn around the 50, like here. Okay, maybe it's going to come back to 40, 45, 50-ish, and then turn around. Okay, maybe it needs like that kind of miracle for Bitcoin to turn around. I'm not saying it's over. Okay, I'm not saying this is definitely the top of the market. What I see is, I understand that a lot of people that they got trapped from the previous bull market because they ignore the sign of a cross down that the market topped. It turned around, it broke a little bit the previous highs. They thought that's it, we're going to 100k. That was back in 2021, okay? And then they got into a trap. They didn't see that. Now, when the market recovered, so to say recovered, it reached the same all-time high. It broke the previous all-time high. They took profit, right? And said, "Oh, at last, I'm free. I'm breaking even." So there's a lot of trouble going on. ETF, all these people are waiting. You know, the big boys. And this is expensive. Bitcoin is expensive. 60 and 70 is expensive. They want to go lower if they want to go in the ETF. And also, remember, they go in with DCA. So every spike that you see to the up is some, ETF buying, on the way down because they're DCA, okay? But overall, until the elections, that we're going to have the elections in November as well, that's another factor. We need to see what's gonna happen with the wars around the world. Middle East is not very stable currently. So, we need to pay a little bit attention. So, we marked the very bottom and the very top. Let's break it down into levels. So I use that very bottom. I'm going to use that very high. Okay. I'm going to break down my levels. Let me expand that to the right. And let's do that a little bit to the left. Maybe to 50. Here we are. Okay. So I'll mark my levels. Here are my levels. Okay. On the big scale now, guys. Okay. At the very bottom to the very top. So I took the very bottom as a support, the very top as a resistance. Okay. And here are my levels, and I need to pay attention to these levels. Okay, let's go to the weekly, have a better close-up, so to say. Let me bring that to 320-ish. Here we are, okay. So here are the levels, I mark my levels. Now, what's the settings of my Fibonacci? This is not a Fibonacci sequence. This is a static percentage sequence, which is the quarters at 25%. Okay, so here are the levels: 0, 25, 0.5, which is the 50%, 75, 75%, and 1 is 100%. And then I have divisions. I split the 25% with 125, 375, 625, 875. Okay, you have this as a screenshot. I can do another screenshot here. Let me do another screenshot for you. Let me paste the screenshot on the chat. So go to the Zoom chat. You have the settings for my breakdown levels into 8 levels. Okay, and this are my 8 levels. Now pay attention and see what price action is doing to these levels that I marked out. That was the beginning. That was the top, right? Ignore this. This is the beginning and the end. But look the other levels. Okay? Look at these levels. Now, from, taking these impulse, the 50% of the impulse is 44. Okay? That is not the 50% to the downside. It's the 50% from the impulse, from the very bottom of the support, very top to the resistance. This is the 50%. The correction 50%, it's gonna be somewhere around here, 37. Okay, so don't be surprised if you're gonna see Bitcoin doing the 50% correction that it does on every cycle. Every cycle it does at least a 50% correction. So 50% correction from the top is all the way down to 37. Okay, so don't be alarmed if you're going to see Bitcoin come all the way down to 44 or even to 37. That will be the proper correction, right? This is what I've been saying since March, that we need a correction. We haven't seen a correction yet. Okay, now in the 2 months it's going to print a cross down. It's going to be more than a correction. It's going to be like the market's going down. Okay, so far a big heads up for you guys: do not bet on longs right now. I think you're gonna do better if you think that you're gonna short because you are on a downtrend. Okay, you may get these rallies, but in overall you're in a downtrend. Okay, so don't try to trade the correction, right? Why I'm saying this, let's do a very quick chart here. When we are in an uptrend, we have this kind of chart, right? This is an uptrend. What do you get? You get a big move to the up, and then you have a correction. We call it pullback, right? Big move to the up, and then a pullback, correction. Move up, correction. So when you're trading on an uptrend, you need to be on the impulse. You should be trading the impulse, right? The moves to the up, not the corrections. Okay? Not the corrections. You can do, but don't go heavy on it. Okay? Trying to get into the bigger legs, not on the small legs. On a downtrend, it's the opposite. You have a big move to the down, then you have a rally up. Then you have a big move to the down, then you have a rally up. Big move to the down, then you have a rally up. We call rallies. We don't call them corrections, right? We don't call them pullbacks. Pullbacks is on the uptrend. On the downtrend, we call them rallies. So don't try to trade the rallies. Try to trade the big legs, the big move to the downside, okay? So if this is a downtrend, try to trade from top to the bottom, the big moves, not the rallies, okay? So don't trade the rallies. Be careful about this one, okay? If the market wants to go down, you have high possibilities and chances to have better trades, winning trades on the way down, okay? So that's about me. I'm just a bit above an hour. I don't want to be too long. I don't want to make you too tired about this. And let's say, for example, a cross down happens in the middle of the range. Yeah, you can do. A cross down is a cross down, right? High significance, they're going to be the cross downs, they're going to be on the highest point. Let me increase the, make it a bit bigger here. So the higher, the high possibilities and probabilities for you is for you to target the cross downs that happen on at the highest level as possible, right? On the overbought, okay? You cannot ignore the ones that happen in between. Of course, you can take advantage, but the high significance are the extreme edges on the overbought and the oversold area, right? It's going to give you high quality trades, so to say. Okay, the higher the time frame, the better. Now, the weekly. Look on the weekly time frame. What do we get? A cross down again. Okay, a couple of weeks ago, I spoke that we had a cross up. That was a good sign, okay? And that was a cross up, a good sign. How much did it give us? It gave us from here to there, 30% move to the up. And then we got another cross down. And you're like, oh, here we go again, okay? What do you get on the weekly. High, low, high, a low, high. Okay, so still a downtrend. Even the indicator is telling you it's a downtrend. We had a good sign here. I have to admit this. That was a low, 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 that was a high, and it broke the high. Okay, so that was looking promising, but it turned around. Markets are doing the random walk. Look at the RSI. It's going lower and lower and lower. Okay, look at the stochastic RSI. High, low, high, low, high. What the price action is going to do? It's going to follow down. It's going to follow down. Okay, so be careful about this one. I'll still see shorts. Maybe we're going to go at least, so to say, all right, to hit that 44. Why? I'll tell you why. I spoke that a couple months ago as well, but maybe you guys are new and maybe you didn't see that TA. Every time we flip in an horizontal level, right? So that was resistance, it came back, hit that resistance, came back, and then we broke it. We have an unfinished business here. We did not test that as a support. We test that level as resistance, but we never test that as a support. When? Sometime in the future, we're going to do this. Okay, so pay attention. Around 30K in the future, you're going to see that it's going to bounce as a support, right? Resistance, resistance is going to flip to support. The same thing happens here, 44. We hitting the resistance, we got up, we never test that as support, okay? So maybe this is the time now that we're going to experience bouncing the 50% of the range, right? This is the support, this is the resistance, this is the 50% of the range. So we're going to maybe experience, we're going to see a bounce from here. That's the miracle that we need to see, that Bitcoin's going to do the minimum correction here, maximum correction here, let's say maximum, or maybe down here. Okay, so this is the big three scenarios that you may see in the future. Bounce from here, or it's going to come bounce from here, or it's going to come bounce from here. Okay, these three are accurate levels: 44, 37, and 30. That is extreme, very unlikely to happen. It may happen. 37, 50%. That one, 80%. That 44 is going to hit it, right? It's going to hit it. And I expect to bounce as a support because we tested it as a resistance, okay? So wait for these kind of levels. Take a screenshot. I'll give you the levels as well. Here we go. This is the prices that I'm looking at. And, I take things level by level, always level by level. If I lose, let's say the 73, then I target the 66. If I lose the 66, then I target the 59. If I lose the 59, which I have, I target 51. If I lose the 51, the next level is 44. Okay. That's the one. That's how I see the levels, guys. Okay. What else? High time frames, use weekly, monthly, 2 months. That will give you a good sign. What things are doing in the market. And that's it. I want to keep it nice and clean and simple. High time frames, use the indicators, break down to levels. And you take it from there. Can we still long if we do scalping? Yes, you can. You can scalp if you want in the downtrend, but you need to remember that if you're trying to scalp a long in a downtrend, you need to remember that it's a short leave trade. Okay, so I know it's called scalping. It means it's going to be in and out very quickly. Just remember that the up move is going to be smaller than the down move. So don't get caught by surprise. Okay, if it's going to go down, go down. Okay. Right, guys. I hope that I gave you a clear view of the markets. How will you use the strategy to set stop loss and TP? Stop loss and TP on a high time frames depends. If you're an investor and you treating the market as spot, you don't have stop loss. You're using the spot mentality, but you're using the futures to do a little bit better than spot, because spot goes on single speed. On futures, you do double speed, right? You do 2x or 3x. I'm not talking about 50x and 60x and 100x. I'm talking about 2x, 3x, 5x in spot mentality, right? So you don't put stop losses, you do DCAs. The take profits on a 2 month is when you get the events, the triggers, which is the cross up and cross down. Cross up is your entry, cross down is your exit. Okay, so that's your TP, to be honest. Guys, take it easy. I know that you like to do some intraday and day trading trades. It's fine, but make sure you see the big picture. Don't ignore the weekly, monthly, 2 month time frames. I know a lot of people don't talk about these time frames. I do. And this is, when a lot of people are zoomed in into smaller time frames and they don't see the bigger picture, sometimes they miss the big signs that, we're heading down, and these people still, have the mentality that we're in the bull market and they're trying to push up, right? And they get wrecked. So be careful about that one. Yeah, every week, every Tuesday. Yesterday, I was on a flight. I had 2 flights to take to come back home, so I had 2 delayed flights. So I meant to be, come back early home, but I did not reach until 1 o'clock past midnight. So all my flights got delayed. So that's why I moved my live to today. But the next one's going to be next Tuesday. Okay, so. Thank you very much for being here with me. I hope you had a good session. I hope you got a good insight. You learned a few things. You're gonna manage better your emotions. You see these time frames that don't give room for emotions to play out. Breakdown level to level. Someone said, I see more here. Well, I'm from the war room, and Mo was in the war room. We got similar approaches. He's doing different levels. I do kind of different levels. But yeah, the mentality is horizontals. Mo and myself love horizontals. We don't do diagonals. Okay, so yeah, we got very similar approach how we break down the chart. Okay, he's doing weekly candles or monthly candles or 3-month candles, 6-month candles. You can do that. You can break down. I broke down the impulse, right, the very bottom as a support and resistance. Different approaches, but it's just the same core, right? We're using the same core. So this is what I'm trying to teach. Horizontals. I teach high time frames because I want to make sure that people see the bigger picture. I want to help the investors, not only the scalpers. We've got too many traders into the war room that they do scalping and intraday and day trading. I am doing the long-term trades. Okay, the spot. I do futures with 2x, 3x, 5x, for the long term to make sure that I perform better than spot. That's it. Okay, guys. This is it for me for today. We're gonna do more sessions in the war room now that I'm back at home. Summer is gonna be over. The summer season here in the Mediterranean. So I'm gonna go back into my routine, in the work routine. So I'm gonna do more lives in the war room. In the school, it's gonna be every Tuesday, right? It's gonna be like the weekly Zooms. Anything you need, tag me. If you want to join us in the war room, you're more than welcome to do so. We have a very good time over there. Here's the war room, the Discord, and we got Carl. You have the chart from Carl every day, right? Multiple times per day. You have Chris. Chris from school. If you don't know him, we all moved to the one room. So Chris is posting regularly. We got Farouk. Okay, he's doing all the posts every day, 3, 4, 5, 10 times per day. So we've got plenty of charts explaining the TA. You got Josh. Here we are. You got Josh. He's doing charts as well and explaining his strategy and his approach, etc. And then you have myself. I got my coaching channel and I've got my charting channel. Coach, it's about talking various different things about strategies, how I see the market, my approach, my mentality. And chart is I print my charts as well, and giving you out the signs that I gave. What was it? When was it? I think I gave the heads up of a short back in the 28th of July, and I said bearish divergence, heads up, watch out. I see that I see a weakness, right? And I saw price action was giving you a high when the indicator was giving you a low. So that was a divergence around 67.7, and I gave the heads up that we're going to go down, and then it just happened. It was breaking all the way down. So so that's it for me. If you wanted to join the web room, go into my profile. I have a link. Press on the link, and I have all the official links that associate with me. You make sure that if you press on my profile, I have a little link here. All right, in there I saved all my official links around me, and you're gonna see it's gonna give you that little website, and it's gonna give you all the links. Right, the first one is the web room. You're more than welcome to join us. Okay, this is Kyle's web room. Okay, the rest of it is anything to do with my original account, so you don't get scammed. Make sure that you follow me, and if you get invitation from another freedom like myself, then it's not going to be me. Okay, be careful about that one as well. I do not approach people out of nowhere, DM you to say hi, how you doing, my name is Salis, blah blah blah, let's do trade together, let's do secret round table trading with, I don't know, magic stuff going on and mushrooms and stuff like that. No, it doesn't happen. Okay. That's it for me. Be careful. Don't fall for the scams. Don't fall for the traps. Watch out. If you have any doubts, please go into the school or to the room. Tag me and drop the question. I'll get back to you. Can you put these links into the current chat on an exchange? Yeah, why not? I mean, I can give you the link for you to. Here we are. And here's your link. Click on that link, save it, and then you have my official links. Okay, so you don't get scammed. You have my official accounts everywhere. I posted my account, original account, so you see what's going on. Another phone call. I have to go. Right, guys. I'll see you next week. Okay, guys. Take care. Have fun. Enjoy yourselves. Be safe. Don't ignore the signs. See the signs. Follow the trend. Always follow the trend, please. Okay? Take care. I'll see you soon. Yeah, that's the one. Don't be the salmon. Don't go against the trend. That's very good, Jerome. I'm glad that you remember it. Alright, guys. I'll see you later. Take care.